12 years after launching the bookstore, which is about where Coinbase is today, 12 years from launching the Bitcoin only exchange, AWS was born within Amazon. AWS does $90 billion in revenue today for Amazon. So I don't know, man. It just looks like the little retail product, and then all of a sudden it starts to spread out and it becomes infrastructure and it becomes essentially built into the internet. That's kind of what Amazon did. It rode the wave of the internet. It's still riding that. And it feels to me like Coinbase is just positioned themselves to do the same thing, but in Web3.
Hey, Mike, tell me something. When you think of the most reputable and trustworthy actor in the crypto space, what name comes to mind?
Coinbase is the first thing that comes to mind.
Same here. Thank you. And today, in episode 5 of The Signal, we'll be focusing on Coinbase, start peeling the layers on that onion a little bit, because I truly feel that it is one of the most misunderstood businesses on Wall Street right now. But if we look back, Brian Armstrong outlined in Secret Master Plan for Coinbase, the company, back in 2016, that they aim to create an open financial system for the world that isn't controlled by any single country or company. And then with this ambitious goal, they embarked on a path that really challenged a lot of traditional institutions. They've, thanks to that, started facing a lot of regulatory hurdles because we're operating this digital asset space, a lot of misinformation, just general lack of awareness in general. So I'm excited to dive into the details around everything related to Coinbase's business, because today it is still mistaken as just a crypto exchange, which really is no longer the case. So excited with you today to help investors out a little bit here by shedding light on the true nature of this business, of the different line items on their P&L, understand how they should be assessed and analyzed, what Coinbase's position is within the broader market, and what its future direction really looks like. So before we start diving into the founding story of Coinbase here, Mike, could you maybe elaborate a little bit on how multifaceted Coinbase really is as a business compared to this misconception of it just being an exchange?
Yeah, no, that's an awesome intro there. And this is, I would agree with you. I think this is one of the most misunderstood companies. And we have done a ton of research. I've been digging through the 10 Qs, and we're going to have a ton of data, and we're going to go through a lot of their different product lines and really dig into this, because it's going to become clear how misunderstood Coinbase is as we go through this episode. But I think, when you look at Coinbase, even if you go back just to last cycle and you look at what Coinbase was at the peak of last cycle, maybe Q2 of 2021 or so, and you look at the diversification of their revenue, there really wasn't any. And so this perception that Wall Street has, I think, is sort of stuck, in 2021, when about 86% of Coinbase's revenue was basically retail trading. And not just retail trading, but the fees on retail trading is quite high compared to what you see in traditional finance and buying equities through a traditional brokerage account. So that perception, it's pretty easy to look at that and say, okay, this is basically a company that is selling a service to retail investors, charging very high fees, and there's going to be competition that comes into this space, and this business doesn't look like it's going to stand the test of time. We're seeing the opposite of this, because the revenue has been diversified quite nicely over the last 3 years. We're going to go through all these different product lines that Coinbase currently has, but that top line revenue coming from transactions and trading is now down to about 65%. And we're in a bull market here. So, there's been quite a bit of trading. We're going to get into this data, but we can see it in the numbers that they are diversifying. They're doing this across a number of different areas of the tech stack via USDC stablecoin. Last week, we talked a little bit about Coinbase's relationship with Circle, the issuer of USDC. Coinbase has diversified with a staking product. So in some ways, with people having assets on Coinbase, there's almost $100 billion of client assets on Coinbase, where they can almost become a bank and provide staking services. They're paying yield to people that have assets on their platform. So that's become a new line of revenue that really wasn't there in the last cycle. They have their prime brokerage and custody line of revenue as well that we talked a little bit about BlackRock last week. BlackRock is going to come up a little bit this week as well because they have a partnership with Coinbase and they're using Coinbase for access to crypto, essentially through those prime services. Coinbase is seeking to fill the gap left by FTX in the derivatives markets. That is another new line of revenue. They have a venture portfolio with over 500 investments. So it's possible that they've got some unicorns that they've seeded already in their venture portfolio. And then we're going to talk a lot about Base. Base is Coinbase's L2. We're going to get into some data here, pulling up token terminal dashboards, but it's pretty remarkable seeing what's going on with Base in terms of the growth in users, developer activity, transactions. We talked a little bit last week about USDC stablecoins starting to proliferate on Base. And there's quite a story, I think, to get into with Base and really the direction that Coinbase is potentially going in as more of an infrastructure type of business. So I think that's what I'm super excited to get into here. This is going to be an awesome episode, and hopefully people stick with us. We're going to get into a lot of data as we work through this episode.
That's an awesome breakdown. There's a lot of very interesting product lines that Coinbase have put out recently. And when you think of the initial vision to build a new open financial system, that's not something you do with just the click of your fingers. It's a step-by-step process where I feel that, as you alluded to Base there, something that has started playing out over the past 6 months is really this move to creating the foundational layer for this new open financial system where Coinbase is really positioned to benefit from a lot of the developments there. But before we start diving into the data and going deeper into each of these specific product lines here, I'd be really keen on understanding a bit more about the origin story behind how Coinbase started out and got to where it is today.
Yeah, you mentioned, who's the most trusted company you think of when you think of Web3. Coinbase, is top of mind for me as somebody who is over here in the States. 80% of Coinbase's revenue is coming from US based users. So this is really the trusted company of Web3 if you're in the US, and I think in some cases also abroad. But yeah, Coinbase was started in 2012 by Brian Armstrong, and Brian was an engineer at Airbnb at the time. And I'm pretty sure, I've seen him talk a little bit about this. He read the Bitcoin white paper, and I think it was one of those kind of visceral things where he read that white paper and just could see that this was going to be a big deal. This is 2012. I mean, there wasn't a lot. It was very hard to access Bitcoin back then. It was mostly people in chat rooms that were, messaging each other and then meeting up in person to do over-the-counter, Bitcoin transactions. And that was how people were sort of getting access to Bitcoin. There wasn't really a lot of exchanges. There was Mt. Gox at the time. That was really it. So what Brian wanted to do was create a Bitcoin wallet and a place where people could transact Bitcoin. And that was it. That was the business at the time. They came out of the Y Combinator. So they raised $150,000. He also met his co-founder, Fred Ursum, in a chat room in a Bitcoin forum. They met up. Fred was the head of business development. Brian handled the engineering. They went to Y Combinator, were seeded by Y Combinator. I think it was a $150,000 grant, and they were off and running. And then I think they raised their Series A was with Union Square Ventures. That was a $5 million round. And then Andreessen Horowitz became involved in their Series B. This was a Bitcoin only exchange, essentially, all the way up until 2016, when they started offering ETH as well. And thereafter, they started adding Bitcoin Cash, a few other assets. And as we know, things have really taken off. Going into last cycle is really when they started to expand different product lines. Their user base got up to over 100 million verified users in the last cycle. So we're going to get into this growth story. But yeah, it just started in a Bitcoin forum with an engineer that worked at Airbnb. And, here we are 12 years later, and it's a behemoth of a company, but it still feels like it's actually early days for Coinbase in some ways.
It definitely does, because when you think of it, I think in some of the initial plans that Coinbase laid out as well, they had kind of a 4-step process on how they're going to grow the company. And it really well took into account the need for broader understanding of adoption of the crypto market as well. And they mirrored it against kind of the development of the internet, where you started from the protocol level, which in terms of the internet was TCP, IP, simple mail transfer protocol as well, etc. Where in terms of digital currency, the equivalent to that would be just Bitcoin, Ethereum, and such. And in one of the blog posts put out many years ago by Brian, said that at that protocol level, the reach and interest for something like Bitcoin and Ethereum would be about 1 million people. And the second level of that would be infrastructure. So in the internet, that was like ISPs, lay fiber, etc. And for digital currencies, that would be exchanges, secure storage, and so forth, which would then reach about 10 million people. And then step 3 was the consumer interface, which on the internet was the browser. And for digital currency, it was user-controlled wallets, etc., which then would reach about 100 million people. And the final step there was then decentralized apps, which for the internet was Web 2, so they bring interactivity to the internet, and for digital currency it was Finance 2.0, which would then reach 1 billion people. And I think in terms of where Coinbase is today, I agree with you 100% that it's still very early. We're at about the user-controlled wallet stage. We're starting to get much better user interfaces, but still we're at the tipping point where we haven't really found those really big, massive unlocks. We spoke about the killer use case for crypto last week, which is stablecoins. But still, in terms of like retail users coming on board, there's a lot that needs to be done. So definitely early times, but great positioning in terms of where Coinbase is right now to really unlock a bunch of new users and adoption for the asset class in general and this new open financial system. But going into Coinbase's different revenue streams, so the product lines, because I think it's really important to understand how the business model works here, because that is what confuses a lot of analysts looking at just trading revenues. All right, it now represents 65%. And an assumption I would make is that actual relative percentage to other business lines is going to keep declining, even though we're in a bull market because they're ramping up these other ones. So could you speak a bit more in detail about these different revenue streams, the business models behind each, and how they kind of contribute to the overall financial resilience of a company like Coinbase in a cyclical market that is crypto?
Yeah, absolutely. Yeah. And I think, part of this came from Wall Street sort of looking at their business model, I think in the past and saying, what is this thing? Like, you guys need to diversify your product lines. And Brian probably I'm sure this is already in the roadmap, but it's very clear that they have done this. So I'm just very impressed. Once they really dug into the numbers here and just seeing the whole growth path, it's very impressive. We're going to start with Base, and we'll probably spend some time on Base as the first sort of diversification. I think Base is very central to a lot of these other product lines that we're going to talk about as well. Base is the L2. And, it's interesting to me that Coinbase, they decided to go build an L2 within Ethereum. There's other, exchanges out there, such as crypto.com and Binance, that have gone and tried to build their own blockchains. They're more centralized blockchains. Binance, I think, only has, 20 different nodes. It's not very decentralized. I'm not sure what crypto.com is at, but it's an interesting decision. I think there's a lot to even look at there, that they didn't want to build their own thing. They're sort of integrating with the open financial system, which is, you brought up, that was sort of the original vision. So they're essentially aligned themselves with Ethereum, which to me tells me that they believe Ethereum is the open financial system and they want to integrate there. So that's what Base is. In terms of Base's revenues, and we'll get into the business model a little bit here, they did about $27 million in transaction fees. So Base is a layer 2 blockchain. What that is doing is basically it's scaling the throughput of Ethereum at the layer 1, making it easier for developers to build applications that can scale, that can really onboard users. And the business model is that there's transactions that run through that L2. They pay a small percentage of that. We're going to get into some of this data. They pay a small percentage to Ethereum for security, for settlement, data availability, and then they take the rest. So they're essentially sort of like reselling Ethereum block space in some ways, is sort of how I think of this business model. Yeah, $27 million in revenue in Q1. It's still a very small percentage of Coinbase's top line revenue. It's about 1.7% or so in Q1. But let's pull up some of the data here first, because I think this is an interesting story to tell, because Base is not even a year old. And they are already starting to dominate the layer 2 space. And we're going to get into the data here. Show this. Okay, so I just pulled up a chart. We're looking at some token terminal data, and this is a chart that's showing the fees over the last 180 days, and it's Base versus Arbitrum, ZK Sync, OP Mainnet, Starknet, Blast, Manta Pacific, and Immutable. So these are basically the top L2s within the Ethereum ecosystem. And the chart basically it goes back 180 days, so it goes back 6 months, and it was pretty well diversified in terms of the fees. When you look at these L2s, Arbitrum is one of the top ones, ZK Sync, OP Mainnet is in there. As you get closer to, and as you go into 2024, Base just starts to eat up a large percentage of these fees across all of these L2s, to the point where today, they're dominating the space. I don't have the actual percentage off the top of my head here, but it looks like they're doing almost, 50% of the total transaction fees. And on some days, even more that are occurring on L2. So pretty interesting. I'll pause there just on the fees. If you want to add anything, we're going to go through some other data points here on Base. But yeah, what are your thoughts on just like this chart here? It looks pretty bullish for Base.
It does, incredibly bullish, and especially in terms of when we also think about organic usage versus non-organic usage. I think Base has been very clear about the fact that they have zero plans for any kind of network token in the long term. And when you think of the structure as well under Coinbase, I don't think users should be expecting too much of that. So a lot of this user activity should be assumed to be organic, a lot of the fee-paying activity compared to some other ledgers as well. So I think that just adds to how impressive it is right now. So great business development initiatives from the Base team to make this happen, and great incentivization in more traditional manners outside of token incentives. If you look at how they're incentivizing builders to come on the platform and build these apps that then people are willing to pay fees to use. So
yeah, to that point, maybe we should jump to another chart here, because I think, okay, so now we're looking at contract deployers. So we were just looking at a chart showing, Base potentially taking over the space in terms of fees. What comes first here before the fees, before the actual applications and the users? It's the developers and contracts deployed. And, we can see here on this chart, again, it just shows Base essentially eating into all of the other L2s in terms of their market share of these contracts being deployed. So yeah, very bullish. I think the developers were up 8x in Q1 on Base, or at least these contracts deployed. I think this speaks to the institutional knowledge that Coinbase has acquired as one of the earliest companies developing in this space. They have a venture portfolio. They have over 4,000 employees now. So they have a ton of they have this really large network and all of this institutional knowledge to draw from to compete against these other L2s. And like you said, they don't have a token for this L2. So there's no distraction there as well. And I think that could be part of the advantage here. We've seen this playbook with other L2. There's a ton of them coming out right now where they're just doing everything they can to incentivize users to come onto the L2. And they have to do all these gimmicks and offer yield. And basically the users come in, they capture the yield, they farm for it, and then they potentially leave after the token airdrop. We don't see this on Base because there is no token. There's no carrot being dangled by Coinbase or anybody at Base. The users are just coming over because they're coming from Coinbase itself and Coinbase Wallet, and there's other infrastructure making it easy to onboard into Base. And then on top of that, Coinbase has their venture portfolio. So now they can sort of seed projects that want to build on Base. And you can kind of just see this thread just sort of getting sewn together here in terms of the user onboarding on Coinbase. And that's your first experience in Web3. And then maybe you set up a wallet, and that's sort of like your step 2. And then maybe you want to send a transaction to that wallet to really learn what it's like to do a peer-to-peer transaction. Now you're in DeFi. Now you're on Base, the blockchain. There's a social media app there. There's other things to do there now. So you can almost see how they're just pushing people on chain. In some ways, they're disrupting themselves, but this is a very clear strategy to sort of build out this infrastructure. So I'll pause there. We do have a few more data points. I don't know if you have anything to add on that.
Yeah, the developer activity and contracts deployed chart, I feel, is a really important one because when you think of it, and you said it very well, that if you want to bring the world on chain, a good place to start is to bring Coinbase on chain. And a good way for people to understand what Base actually is within this behemoth of Coinbase is that you need a developer platform to bring Coinbase on chain. And Base is that developer platform. And they're now taking the first steps to bring the whole behemoth of Coinbase on chain through that developer platform. And that flywheel with the venture portfolio and their ability to incentivize builders and just tap them into the broader product suite that Coinbase has to offer and really abstract the technicality and complexity of going on chain is just incredible and puts them in a position that's hard to compete against as any crypto native company. So that's an important chart to follow because I feel a lot of builders, and just today, Morpho, one of the leading lending protocols on Ethereum, announced that they had prior been pretty strict about the fact that they won't expand outside of Ethereum L1, and they'll be very picky if they do, and they just announced that they'll be expanding to Base. And the reasoning behind that will most likely be the same as a lot of blue chip DeFi protocols that are deployed on ETH mainnet, is that, okay, the network effects that Base is able to provide to builders thanks to their positioning in the market and product suite is just, it's above anything else. So a very interesting chart to follow. They're able to attract a lot of builders.
Yeah, well, really well said. I'm going to move on to some other data here. I thought this was one of the most interesting charts here. Again, we pulled up some token terminal data, and we're looking at a chart that's showing the 180-day fees for Base versus the expenses. And the expenses are the settlement fees or data availability fees that Base has to pay to Ethereum, right? The user comes in, they transact to Base through Base, and then Base is settling that transaction to the Ethereum L1. Very interesting here because the expenses drop off a cliff in like mid-March. I'm curious because what I've been observing with these L2s and essentially the margins with this business model is that it's been pretty consistent when you look at Arbitrum, Optimism, even Base up until a few months ago, that the margin was around 25%, right? In terms of the fee that the L2 captures from the user versus what they're paying to Ethereum. Very profitable for Ethereum, but not a great margin for these L2s. 25% is still pretty good. But what we're seeing now is like just way less expenses that Base seems to be paying for it here. Do you have any insight into what's going on here?
Yeah, so that drop off is a really interesting one, but it's the EIP 4844. The fork happened on, I believe, March 13th, after which, the cost of revenue just declined drastically for these L2s. And at the same time as that happened, I've been listening to a lot of interviews with Jesse Pollock, kind of the co-founder, CEO, the leader of Base at the moment, has been speaking about the fact that it almost happened hand in hand. When EIP 4844 happened, then user activity just immediately skyrocketed on Base, which ended up in a situation where the fees almost returned to a normal level pre-EIP 4844 because user activity multiplied by that much while the actual cost of revenue declined. So over a certain period of time, which you see that spike in the fees there, Base was capturing a lot of revenue over time because then they hit kind of scaling constraints for a moment, but they have since been able to open up some of those bottlenecks and have pretty ambitious goals in opening them up as well, because Jesse has been pretty vocal about the fact that they in no way want to maximize value capture for Base or fee generation. They just want to open the bottlenecks. And right now it feels that they're almost at maximum capacity all the time. So as soon as they're able to increase the limit of transactions that can go through, then those transactions get filled up immediately. So it's a supply and demand kind of balancing act at the moment.
Super interesting. So they're, to your knowledge, they're not using Celestia or EigenDA or anything like that. This is just purely coming from EIP 4844 and the upgrade there. That's wow.
Yep, the
Pretty big.
drop in cost of revenue here is purely from EIP 4844,
Yeah.
which has resulted in a drastic decline of Ethereum's revenues,
Yeah.
because we can see somewhat of a similar decline on most L2s.
Yeah, it's going to be interesting when we put together the Ethereum financials for Q2 to see what the impact of this is. My sort of mental model has been that the fees were going to drop, but like you said, and this aligned with kind of my mental model for computing history. And when you open up a bottleneck in terms of the supply of a computing resource, that there's typically new use cases that come in and fill that gap. And it sounds like that's already playing out on Base. We'll see what that ultimately means for like value accrual at the L2 layer versus ETH L1 as this moves forward. But really bullish chart here also for Base, capturing those fees and paying less to the Ethereum validators. Moving forward here over to just active users. This is just another data point I just wanted to share here. Looking at another chart pulled up from Token Terminal, just showing the active users across these blockchains. Interesting that like we showed those other charts and Base really took off, over the last 6 months or maybe the last 3 months or so is really where we saw things really take off. In terms of users, they are, pretty even, I would say, with Arbitrum and ZK Sync at this point. OP mainnet is a little bit behind, but it's kind of a battle, I would say, in terms of like active users right now. But interesting that, of those active users, there seems to be more activity on Base is kind of how I would, because the fees, Base has become the number one L2 in terms of fees. So just a little bit more activity. The users are stickier, I think, on Base right now. Anything you want to add to the kind of user activity?
Maybe only addition is that these other chains have had a 2-year head start pretty much to
Yeah.
what Base came in. And given that, then this user activity here is somewhat impressive.
It helps that they can close that gap pretty quickly when they've got 100 million verified users on Coinbase. So that's definitely taking advantage of that. So why don't we hop over to trending contracts and then we'll move on from Base. But this is pretty interesting. So just pulling up trending contracts on Token Terminal, and this is where we can see which applications on Base are driving the most transaction fees. So I've got this sorted by 90-day gas fees. The number one app on Base is Uniswap, which is pretty interesting. Uniswap, I think most people would think that Uniswap's a competitor to Coinbase in some ways. Uniswap is a decentralized exchange, the largest decentralized exchange out there. And it's almost like Base has become the strongest growth vector for Uniswap, which is pretty interesting. What do you make of Uniswap being the number one app on Base currently?
That really speaks to the importance of diversifying a business model based on just trading and exchanges, especially if the long-term goal is to build purely on-chain, which, as we both know, is a permissionless environment where the cost to change service provider from a user's perspective is very small. So you definitely, as Coinbase, you're not going to want to be dependent on having your users pick you to trade on. You're going to want to diversify that. So I think in the long run, I think Coinbase might not even be thinking of Uniswap as that strong of a competitor, rather than the fact that as they're building the hub for an on-chain economy, in their own words, they want all activity to be happening on top of Base, and they'll be able to monetize it then through other ways.
I think that's fair. They're both driving value to each other via this layer 2. Uniswap's driving value in terms of transaction fees, and Uniswap is capturing value from Coinbase's user base that's moving in there. So pretty interesting. Exactly. Some of the other, it looks like most of these apps are, that we see in the top 10 or so are, there's mostly DeFi stuff. Layer 0 is the bridge. So that's the main bridge. There's an NFT collection here. SushiSwap's in here. Aerodrome is number 8. OpenSea has deployed on Base as well. So they're sitting in the number 12 spot. We've talked about Coinbase's relationship with Circle and USDC. Circle is number 13 in terms of the 90-day gas fees on Base. If you go a little bit farther down the list, you see friend.tech, which is the social media application. Have you done anything on friend.tech just yet?
Just exploring.
Yeah.
Nothing too serious yet.
I haven't set anything up over there just yet. I am on Farcaster, but I haven't really had a ton of time to be super active over there. This is one of my, I just have a feeling we're going to see something in social like really take off this cycle potentially. So keep an eye on friend.tech. I believe that Coinbase Ventures is behind this. Maybe not Coinbase Ventures, but potentially through Paradigm, which Paradigm is one of the larger VC companies in crypto. Fred Ursum, who was the co-founder of Coinbase, left Coinbase and founded Paradigm. And so there's definitely a relationship there to pay attention to as well moving forward. Anything else you want to add, I guess, on trending contracts or anything else related to Base before we just move into some of these other product lines?
Looking at the trending contracts here, it's very in line with what you typically see for a newly or recently launched L2, if you look back historically. So there isn't anything too special yet happening on Base, other than that users seem to be excited and sticky, and that developer activity seems to be much more active than what we've maybe seen on other L2s at early stages. But the ecosystem itself still needs a lot of new projects and use cases, of which social could be one that has really taken off in a way that hasn't on other chains yet on Base. So interesting to follow, but we'll see how the top trending contracts changes over time, because I know there's a lot of institutional interest toward Base as well, just building different types of money markets, getting the app layer to mature a bit from here, and then building proper capital markets on top of that, how it will shape out to differ from this more very normal crypto native type of first 6 months.
Maybe we should talk a little bit about Coinbase Wallet here, because when you think of, okay, Uniswap is now on Base. Uniswap is sort of playing a similar game to Coinbase, where they're trying to integrate throughout the tech stack as well. So they've launched their own wallet, right? They want to own that relationship with the user. So it gets interesting when you start to see, what's the wallet? Is Coinbase Wallet? Is it Uniswap? Is it MetaMask? Which wallet is going to be like the wallet that becomes sort of like the Gmail of Web3? Because all of a sudden that becomes like this really interesting potential like data monetization game that potentially get played here. And I don't know if that's the angle that Coinbase is going for. And I don't think they would want to share that if it was, because this is like very antithetical to Web3, but this is all public data. And you have to think that there's, when you think about wallets and what that represents, that's potentially like a data monetization opportunity, like similar to Google search, potentially for Web3. Something I've been thinking a little bit about is, because all of these assets are going to be flowing, I believe, freely, and self-custody is going to be the way that people interact with Web3, is if the users are on Coinbase and they're onboarding there and they're sending assets into DeFi protocols on Base, like I could almost envision a data monetization thing where the DeFi protocol pays Coinbase for asset flow, right? Similar to, a company paying Google for the ability to access search results, like search ranking. So you could almost see, and I think this could play out with some people, Fidelity, right? Fidelity has a platform where you can go buy Bitcoin, you can buy Ethereum. Aren't there users going to want to move those assets off of Fidelity? And how do you monetize that if they move the assets? So I don't know. I think this could be a massive revenue generating in the future, that maybe like these protocols are going to have to pay for asset flow. So it's something I've been thinking a little bit about. We'll see. And then, how do the assets come back, right? Coinbase is going to probably want those assets to come back. How do they do that? Is there insurance that gets offered or something through Coinbase custody? Unsure, but that wallet gets pretty interesting as the user base grows and there's just more people interacting, and the data gets really rich on chain. I don't think they're monetizing the wallet just yet. Are you aware of anything? Like, they're not, like MetaMask charges fees and stuff like this. I don't think they're doing anything just yet.
Yeah, the Coinbase wallet has been a pretty bare bones product to date. And to be honest, it hasn't been, for example, my favorite wallet to use at all. I've even been avoiding it a little bit in terms of these self-custody wallets. But a really interesting development over the last just few weeks has been related to smart wallets, which is like the second generation of the Coinbase wallet now that's being introduced through Base, which I maybe briefly want to talk about here because that ties into everything you said there. And smart wallets, I believe, will be a massive unlock as well for bringing more retail users on chain, because the idea there is to abstract the complete onboarding process. So instead of seed phrases, etc., you use a fingerprint to sign in. So very similar to just logging in or authenticating any Web2. You can put in developer subsidized gas into the actual user experience. So a user that uses a Coinbase smart wallet might not have to pay gas fees at all for certain applications because developers can subsidize it on the back end. They have multi-transactions can be batched into one, so it's just much more simple UX. And one of the very interesting things here that Jesse again spoke about is that what the Coinbase Smart Wallet will enable is that you can directly spend your Coinbase balance, the centralized exchange balance, on chain through a smart wallet. And I think that's where it ties into a broader business model and monetization method as well, is that you're going to want to get people to securely store their assets. So take care of the issues and concerns related to self-custody, have them deposit it to Coinbase, the centralized exchange, set up a Coinbase Smart Wallet, which is basically a self-custody wallet that you can use on chain and just interact as you normally would with a MetaMask wallet, etc., but in just a more streamlined manner. So to me, that is a very interesting development, and they just put out like V1 or beta version of the smart wallet, so it's still in early stages and not as smooth as they want it to be, but going into a direction that just aligns with everywhere they're going.
That's super interesting. This is what's necessary to go to the billion users, right? Like it's just you and I, anybody who's interacting in crypto knows that it's very early days. It reminds me of using AOL or something, and someone calls the house and you get kicked off the internet. Like there's just a lot of like quirkiness and friction right now. So these types of things, Coinbase is a company that is going likely to be responsible for like crypto going mainstream. And that's pretty interesting to see that. As far as the wallet goes, like the other thing I just wanted to mention here is, I don't know if you've run into this at all, but there's a little war going on with these wallets. And I don't know if this is still happening, but when I would, connect my MetaMask wallet, I haven't done this recently, but like connecting my MetaMask to an application or something new, I would get like this pop-up that Coinbase is trying to be the wallet, because I have a Coinbase wallet and a MetaMask wallet. So it's like Coinbase is playing some games here where they're trying to get you to use their wallet when you're interacting with various apps and stuff like this. Have you experienced this at all?
I have, and it's not just Coinbase Wallet. Like I just quickly counted the amount of Chrome extensions I have. It's 11 wallets, and usually when I interact with some app, it's actually very annoying UX because I don't know which one of them will ever pop up when I click Connect Wallet, and it's usually the one that I don't want to use. So that is just unnecessary friction. And whenever it becomes possible, I want to aggregate all my wallets, or just pick one that is the best and stick with that.
Yeah, account abstraction. That's what we need to come.
Yeah. Let's move on to trading revenue, because it still does make up for the bulk of revenue, and it is a pretty important one. However you want to think of Coinbase as a bank, an exchange, or an infrastructure provider, facilitating trading is a pretty important part of that. So if you could break down what the trading revenue really looks like and what the composition of it is.
Yeah. So like you said, still a high percentage of the revenue. So 65%, still significant. The interesting thing about that 65% is it was 50% in the crypto winter. So it was almost like the revenue, this diversification that Coinbase is doing really comes into play during the bear market, which is kind of what I think Wall Street wanted to see, like in the last cycle. Like, how are you guys going to backfill, all of this loss of trading volume in a bear market? And they've done that. Now that we're in a bull market, those, that 50% spiked up to 65% of the revenue. So in Q1, trading volume was about 312 billion. That's total across institutional and retail. And it's up 115% 115% from last year. So like clear that we've entered like a bull market, early stages of a bull market, I'd say, but still significantly off like where we were in Q2 of 2021, which with kind of like that was the quarter that Coinbase went public and Bitcoin, I think, hit its all-time high during that quarter. And then it touched it again, like in Q4 of 21, but I'm using Q2 as sort of the peak here. So we're still about 48% off of where we peaked out in terms of volumes for Coinbase. In terms of, I think there's some interesting data here that we can go through in terms of where are these volumes coming from, which assets, and also, what percentage of the volume is retail versus institutional. So I'm going to talk a little bit about just these assets first, and we're going to focus on Bitcoin, ETH, and then basically everything else. But if you look at where we're at in Q1 of 24, in terms of the percentage of trading volume, coin is 33%. So Bitcoin is still a behemoth that is driving most of the transaction revenue today. If we go back to Q2 of 21, at the peak, Bitcoin was only 24% of the trading volume. And I think the story here is we've talked a little bit about this, I think, in prior episodes of like, where are we at in the crypto cycle? And typically Bitcoin has strength in the early stages of a bull market. And we're seeing that in the volume data coming from Coinbase. So if we go over to Ethereum, so again, Bitcoin 33% Q1, last bull cycle at the peak, it was 24%. When we look at Ethereum today is about 13% of the total volume. And when it peaked out in Q2, we were at 26%. So again, this tells a story here, because when we were peaking out in the last cycle, that is when you have that rotation of from Bitcoin to the altcoins. So, Ethereum is at 13% today. Nobody really likes Ethereum. We see a lot on Twitter, like it's kind of a hated asset right now. It's losing to Sol, it's losing to Bitcoin. Ethereum's kind of in no man's land right now. But I think people are going to be surprised at what happens potentially later in the cycle when there is a rotation, especially if we do see like an ETH ETF. I think that 13% could go back to 26% or something like that. So I think that's one interesting data point. Anything that you want to add just on? So basically Bitcoin and ETH today is about 46% of the trading volume. So it gives you an idea of like how concentrated and just the power laws in crypto there.
Yeah, and that power law raises in my head the question of how much of this activity is institutional versus retail driven. And I think we can speak about that next, but as we think of institutional interest right now, it's very Bitcoin focused, maybe a little bit of experimentation with ETH, where I would assume that retail focuses more on the longer tail, but it's interesting.
Correct. Yeah. So what's interesting here is, so retail volume is about 18% of the total volume occurring on Coinbase. So I was sort of surprised that it was that low, actually. I thought it would be a higher percentage of the total volume. So, I guess it kind of does make sense. When you think about retail, they're trading with much smaller, allocations, not a ton of money. Institutions are putting more money at play, larger trades. But yeah, 20% is coming from retail. 92% of the transaction revenue is retail. To give you an idea of what those fees are for retail versus institutional, Coinbase has high fees for retail. So it's about 1.3%. If you just use the simplified Coinbase user interface, which is probably what most like kind of newbies coming into crypto are using. Do you use Coinbase? Like I use Coinbase, and I use their advanced screens where it's cheaper, but it's still more expensive than the institutional product that they offer.
Yeah, Coinbase is my centralized exchange of choice. That's what I use as an on and off ramp myself. And that's one place where I actually kind of have to give Coinbase some critique, is how high the fees are in the simplified view. Yeah. And the fact that you kind of need to know about the advanced view, and the fact that they have lower fees to get to you to do that, when in reality it's just like it takes you 2 seconds extra to get much lower fees. But they haven't made it very clear in the UI that this is the
Yeah.
case. So it can be seen as a bit misleading. But yes, I also solely trade through the advanced view.
Yeah. It's such a cash cow. And I think most retail investors have no idea what's going on there and they're paying pretty high fees. When you think about trading on a brokerage, you're paying nothing. So
That's true. Then again, they rolled out Coinbase One, which is the subscription that if you're trading more actively, then in the simplified you get
yeah.
zero transaction fees. But then I do believe that they still have some small spread that they take on top of that.
Yeah. I'm not sure exactly I think it's, what is it? Not sure exactly how much it costs for that. It's, what is it? $30 to $50 a month or something like that. You get to trade for free.
Yeah.
There's some other perks. I think you get access to Masari data and research or something like that. They give you maybe access to your tax calculations and things
Yeah.
like that through there. So yeah, they do have a few different offerings, I guess, to get lower trading fees.
Which is actually interesting in the big picture, because when you think of that sort of subscription model, it gets closer to the business model of a bank. And in my eyes, you can think of as a bank where, okay, you have a savings account, you have a brokerage account where you can do trading, and then you have some supportive material, be that research or analytics, etc. So I think the Coinbase One is moving a bit more into that category, that pay a fixed fee per month and you get a bank account. Not quite yet. They need to add some functionality, but going in that direction.
That makes sense. And in terms of the longer tail of assets, like it's almost 50-50 right now in terms of the assets that are trading on there. Bitcoin and ETH are the behemoths. There's nothing else that's 10%. So it's a huge drop off after Bitcoin and ETH. Solana is number 3, but it's less than 5% for Solana. I think Cardano was number 4, which is just incredible to me that people are still trading Cardano. Cardano's still up at the top of the leaderboard in terms of just market value and stuff too. So I guess not super surprising. And then Dogecoin was in the top 5 assets as well. And then there's a pretty long tail. There's a total of, I believe, 260 assets that are trading on Coinbase today. They believe all of these are non-securities. We're going to get to the sort of legal stuff that's going on later in the episode here. And we're going to get into some more of the financials as well later in the episode in terms of profitability, Coinbase's balance sheet, expenses, and kind of what we've seen in terms of just how they're managing the balance sheets and the P&L. Anything you want to add, I guess, before we sort of move into the next product line here?
Retail loves their memes, so it's definitely understandable why centralized exchanges do list these tokens there. And Cardano always surprises me. Someone needs to do a proper case study on how that community was built and why it is so strong, because there's a lot to learn there for a lot of projects who want to build communities like that. It is interesting that it is held so well.
I agree. It is fascinating. And we've seen similar, Chainlink had they call them the Chainlink. What do they call it? I think it's the Link Marines. That's what it is. And they have one of the strongest communities in crypto, kind of similar to Cardano. Chainlink is actually like a real thing. And it's, I believe, going to be one of the most important. It is one of the most important products in crypto. I think it's going to continue to be. Cardano, just doesn't have, it's kind of a ghost chain. But the interesting thread with these crypto networks that have like really strong communities is there's usually like a very charismatic leader there. And both of those networks have that. I think that drives a lot of it. And then the other thing is people get rich on these things and then they stay and they become loyal. So the human behavior of these tribes in crypto, some psychologist or somebody needs to come in and do a study on this, because it is pretty interesting.
Because this goes on a bit of a tangent, but I was speaking with Matthew Siegel, the head of digital asset research at VanEck yesterday, and VanEck's index arm, Market Vector, just put a meme coin index, and it's market cap weighted. But I asked him just for fun does he see a point in the future where we could start tracking meme coins based on fundamentals related adoption or network effect metrics? Because when you think of it, there is a way to assess the strength of a community, right?
Yeah.
Necessarily, maybe on chain, you would think of something like holder count, holding period, etc., how those grow. But then off chain, social sentiment type of metrics, where looking back at how the biggest meme coin communities have been established, there's probably a lot to learn from that. And you could find patterns that could be used to then identify potential newcomers. So maybe at some point in the future, we'll see like fundamentals of memes, because this is the financialization of the internet. So you can't just kind of
It
look
is.
away from them.
I agree with you. It's funny you bring that up. And I don't want to go too far on the tangent, but I actually I had a conversation about this with somebody this week as well, and I have the view that we have to sort of come up with a way. How do we define fundamentals? But like, there is a way to do fundamental analysis of meme coin, in my view. And like when I look at these things, I'm typically looking. You can go on chain and you can figure out like what the holder base looks like. If you see that there's like someone that owns 50% of the token, that's, you don't touch it, right? That's that's looking at fundamentals. And then you're combining that with like the things you see on the internet and the quality of the memes and like pattern recognition. Does the thing make you laugh? And yeah, there's something there, probably tying, maybe it's social media activity and pairing that with on-chain activity. And there's definitely something there for sure. And just like, how do you define fundamentals? You're not looking at cash flows, but those are still, in a way, there's fundamentals there. So
Exactly.
yeah.
Exactly. But pulling it back to the other side of the volatility spectrum from meme coins to stable coins, would be great to break down that line item on Coinbase's P&L, because it is a pretty big revenue contributor, and I feel it's growing quite fast.
100%. This is the number 2 line of revenue for Coinbase. We mentioned that it was 65% for the trading activity. Base was a little under 2%, 12% of top line revenue in Q1 was the stablecoin, $197 million. And this is pretty interesting because we were trying to figure out last week when we were talking about Circle, we didn't really know what the split was in terms of, they have a joint venture with Circle. What is this split? And I think we can get closer to it now that we know how much revenue Coinbase brought in from stablecoins in Q1. And, we were sort of projecting that based on the assets under management of Circle, what their revenue could look like, their annual revenue. And we thought if they were collecting 5% on the 33 billion of assets out there, that they would be doing about $1.6 billion of annual revenue. So that would be about 400 million per quarter. And we can see now that Coinbase reported 200 million in Q1 for stablecoin revenue. I'm assuming all of this is coming from Circle, the relationship with Circle. I don't have any insight. And I tried to figure out if there was any notes in the financial statements that could indicate if there was something else going on there. I couldn't find anything. I think it is just Circle. So that looks like maybe they're closer to 50%. Does that make sense to you that it could be that high?
That's a good question. But if you think of the origin story of Circle, it was really Coinbase and Circle together that started it.
Yep.
So I don't see it impossible at all that it would be closer to 50%, which if that is the case, then that is a pretty bullish thing for Coinbase.
If you're an analyst, if you're an equity analyst and you're learning this, because, let's play that out a little bit. So Circle got to 55 billion in assets under management. If that were to occur again, then all of a sudden Coinbase's quarterly revenue jumps to 300 million for stablecoins. If Circle went to 110 billion in stablecoin assets under management, all of a sudden Coinbase is reporting $600 million a quarter in stablecoin revenue. We were talking last week about how we thought like these are probably going to go to the trillions. That this becomes a massive business. If you think about Circle, they're likely to go public this year. Coinbase basically owns half of that. And this is just 12% of their revenue today. This is why we think Coinbase is very misunderstood. This is one of those reasons. And I was just kind of doing like a control F in their Q1 10Q, and there were 31 mentions of stablecoin. If you go back to into Q2 of 21, there was only 3 mentions of stablecoin in there. So, Wall Street, I think, just hasn't fully caught up to this diversification story and just how powerful these business models potentially are. So I'll pause there. There's probably more we could talk about with the stablecoin because, they're pushing that into Base, and this is really where the open financial system is likely to take place using that stablecoin. So now you start to tie it all together. Now you've got the wallet, you've got the stablecoin, you've got the blockchain, you've got the venture portfolio, and they might own a lot of these projects that are going to get seeded onto Base. What part of this tech stack is Coinbase not like taking a nice slice of the pie from? It's almost hard to find an area where that's not happening. So
They're ticking all the boxes. There's three layers of the on-chain economy stack. You have the developer platform, which they're building. They're facilitating an app ecosystem on top of that. And then you have capital markets, which need trusted mediums of exchange, which on-chain at the moment is USDC. And everything is just seamlessly plugged into each other. So you have a platform that is easy to plug into with all technicality abstracted for both retail users, and is trustworthy and institutional grade enough for all of the big money markets and institutions to come in and plug into. So quite a position to be in.
quite a position to be in. I would agree. So let's move on to the next line of revenue. So staking. This is another one that this could be a massive business for them. So staking, this was actually a product they did roll out in the last bull market, but they actually they started it and then they stopped because the SEC shut it down, and they were calling it their earn product, where you could, have some assets. I think they were doing it with stablecoins, but they were paying a yield, and the FCC basically shut it down, or at least they listened to them and took the product off the market. It's now back because I think all of their competitors were offering these types of products. And so it's back. They did $151 million of staking revenue in Q1. This business model is another very fantastic business model. Again, it's very strategic. So users have assets sitting in Coinbase. I believe it's nearly $100 billion of assets. Actually, let me just check that. Yeah, it's around 100 billion of assets. So when you think about like how many banks have 100 billion of assets just sitting on the platform that they can earn fees from, basically they don't have to reinvest, right? They're not reinvesting those assets to earn. They can just offer services around that. And that's a new line of revenue. So that's what Coinbase is doing. Their staking product is essentially what that does is it just allows people to provide staking services to these platforms. If you hold some ETH and you have that on Coinbase, they will stake it for you, return some of that fee that you earn in transaction fees and MEV, consensus rewards that come off of Ethereum. They will pay that to you, and then they will take a cut. I think they're taking 25% cut, which is much higher fee, similar to their, retail trading, much higher than what you would see on a DEX. Again, much higher than what you would see in DeFi. I think Lido takes 10%, which is still pretty high. So they're making a good money here. This is 9% of their top line revenue. And, when you think about staking, like the profitability of this goes up as the value of the assets goes up, right? So if Ethereum goes to $10,000 per coin later in the cycle, potentially, the revenue that Coinbase is going to be reporting is going to increase from staking, is going to increase in line with that. So this could be like a massive line of revenue as well. It's 9% right now. We'll see based on asset prices, it could take up a larger percentage of the top line revenue, but I'll pause there to get your thoughts on the staking product.
Yeah. Seamlessly embedding a staking product into what Coinbase already offers users really helps them move into the direction of it feeling like a true bank account or a savings account, because you can have interest-bearing accounts, which from a user you don't feel like you're staking or participating in anything. It's just you're earning yield for depositing an asset somewhere.
And I mean, I got to say, if you're a bank and you're looking at this, and hopefully that some of these banks will listen to this episode to get a feel for what's going on. I mean, you are falling behind. And this is a regulatory issue. These banks cannot get involved here at all. I mean, we just saw basically the White House come out and say, hey, we're going to veto this bill that Congress was trying to push through that would allow the banks to custody crypto assets. And, what's the next step? Custody is a service. And so there's a business model there. But then what's the next step of that? It's staking, capturing those fees and growing assets under management. And so the banks are sitting there on the sidelines looking at this, and they can't compete in the US right now. So Coinbase is just getting a massive lead here. And it looks to me like I think Coinbase is going to start to look like a bank. I mean, it's doing all kinds of things here, but, we mentioned, I think last week, a lot of people are just they have stable coins. They use Coinbase as their on and off ramps. Getting into crypto, you got some stablecoins, you just leave them on Coinbase and you earn a yield there, and it's paying you more than what Bank of America or any of these other large banks are paying or able to pay right now. So
Yeah.
bullish on this product as well.
Yeah, and also when you think of Coinbase turning more into a bank, if you're an analyst who's used to staring at the financial statements of a bank, you'll see it's very credit and interest income focused. Whereas with Coinbase, we're looking at full reserve banking, at least up until right now. We'll see how the credit markets play out in an on-chain economy, but I believe that when they speak about reinventing a financial system and an open financial system, it's not going to be fractional reserve banking. It's going to be a very different approach. And with these different line items, how they're able to generate a solid and sustainable business without fractional reserve banking is something that existing banks should really be looking at and trying to understand.
100%.
Should we move on to speak about then the prime brokerage and custody product there? Because that is one that, of course, with the launch of the Bitcoin ETFs has gotten a lot more interest, and Coinbase has been a big beneficiary there. So maybe if you could walk through what that looks like.
Yeah, let's do it. So yeah, this is another one of their sort of, I guess, original product lines, the prime brokerage and custody. And I think for the most part, this product was rolled out to a lot of the more institutional players in crypto that are looking for these prime brokerage type services that could be accustomed to in traditional finance. So this is, custody. This is, access to lending and things like this. This is about 2% of their total revenue today. And, we'll see where this goes. I think most of the larger like TradFi players that have moved into crypto have sort of outsourced a lot of this to Coinbase currently. There are a few other larger like custody providers out there that are providing some of these like prime brokerage services, but this is where they have the integration with like BlackRock. So we've mentioned BlackRock has some strategic partnerships with these Web3 companies, offers crypto to their entire platform via Aladdin network. So that's pretty interesting. If there's more adoption coming from BlackRock, there is an integration there. So this is another product line that has pretty good growth upside. This product line is competing with, the Fidelities of the world and that are offering these types of services to their clients. So we'll see, how this kind of plays out. But the fact that BlackRock has decided to sort of partner with Coinbase in some of these areas, I think is really interesting and very strategic to the growth of a product line like this. Anything you would add there?
No, I think that was a good overview. I think one thing that keeps coming up here is that there are a lot of key partnerships in place. So Coinbase is partnering with some really great institutions here. I mean, we spoke about BlackRock, you have Circle, and these both contribute already pretty meaningfully to Coinbase's business. And in the long run, it will just keep doing that. But in addition to those, I know that there are names such as, you have Visa, PayPal, even Google Cloud and the such that are working with Coinbase. So maybe it could be interesting to also hear a bit more about how these kind of partnerships fit into everything we've talked about.
Yeah, there's a few here I think that are probably worth mentioning. So Visa's one. I mean, they have a relationship with Visa where basically if anybody that's Coinbase user that has their Visa card in partnership with Coinbase can essentially go anywhere in the world that is using the Visa network and pay with crypto from a card. This is pretty interesting that, basically Coinbase is handling the swap and the Visa is not accepting, or the merchants aren't actually accepting crypto. Coinbase is just swapping that on the back end, but it's allowing the user to, hey, it's a bull market and you've got some Bitcoin in Coinbase and the assets are up and you just want to like pay for your groceries with a little bit of Bitcoin. Pretty interesting. This is a way that you could almost start to see the medium of exchange use case for crypto start to potentially play out a little bit. It's interesting seeing this too, because there was a company called Soon. It was a startup that I was kind of interacting with a few years ago that they were trying to roll this out. And it just looks like, how are you going to compete with somebody like Coinbase where they can just integrate with Visa? Visa has 40 million merchants around the world where this is already in play. So interesting little partnership with Visa there. We talked about the partnership with Circle, so I won't spend a ton of time on that. And people can check out last week's episode where we really go into that. They've got Google Cloud as a partner, which is interesting as well, like a really large Web 2 player they've sort of integrated crypto payments for cloud services with Google Cloud. And then this is kind of like a data play where BitQuery is being used, by the Google product. And they're kind of rolling out like public data sets powered by Coinbase. This then like facilitates app development. So kind of an interesting, product line there. I don't know if these are like really monetized and, kicking off a ton of cash flow just yet, but that's an interesting, partnership with a mega player from Web 2. And then of course, BlackRock is the other one. We talked about BlackRock, the integration with the Aladdin network. And then BlackRock has also partnered up with Circle as an investor into Circle. So there's some interesting triangle of power players there between BlackRock, Circle, and Coinbase. But I think those are kind of the main ones. I don't know if I missed anything that you're aware of. But yeah, man, I mean, they're checking every box. They're just checking every box.
Yeah. It's a good web of partners to have, especially when you're under such intense regulatory scrutiny to operate in a way that, lives up to the compliance standards of all these institutional grade publicly listed companies, as Coinbase is one themselves as well. But I'll use that as kind of a bridge to move on to speak about competition, because that is an interesting topic, and it kind of needs to be split into domestic competition in terms of the states and then more international competition, because those two have very different ballparks, partially due to regulatory differences and scrutiny in different geographical markets. But crypto is a very competitive market. And even on the centralized exchange side, the cost to like change provider from users' perspective is, you transfer assets from one wallet address to another. So it is pretty low. And you have players internationally like Binance, which, has now really been crunched by like the SEC. But then you have local players in the States like Kraken. I mean, local in the sense that registered in the States, but operate internationally. And also more traditional fintechs such as Robinhood, Revolut, and these type of companies that are enabling crypto transactions and holding for their customers. So how does Coinbase really fit into this more competitive environment, both at a high level, but then also in terms of key metrics?
Yeah, great question. And yeah, I think, when you think about Coinbase was first, right? They were in 2012, they were the first trusted company to come into the space. Binance came later, and Binance kind of just moved way faster than them, really capture the Asian market, which is a very active crypto market. And so in terms of like where Coinbase sits, I guess at a broad level, Binance has the most volume and the most users in crypto, and that's primarily the Asian markets. Coinbase is doing, let me just pull up my numbers here. So if we compare to Binance, they're doing about 5x the volume. And when I give these numbers related to competition here, I'm referring to Bitcoin only. So we're just looking at Bitcoin on like how we're going to compare these. So they don't have the long tail of assets. But Binance is doing about 5x or so average volume for Bitcoin than Coinbase is doing. Binance is a behemoth as well. They have the BNB blockchain. They have a number of other product lines. But I would just say that the sort of trusted entity here, and you're not a US citizen, but you are using Coinbase. And I'm guessing that's because you trust Coinbase more than you trust Binance or these other competitors out there. Is that fair?
Yep, 100%.
Yeah. So that's one of the other, Binance is kind of controls the market, but it's a different user base. It's a different geographic region. Crypto.com is also sort of in that APAC region, and Coinbase is doing more volume than Crypto.com, but it's fairly close. Crypto.com is big. I think people are aware of Crypto.com. I've actually never used that platform, but they've done quite a bit of marketing, and people they have their naming rights on the Los Angeles Lakers stadium. I think they were doing quite a few commercials during the last bull market as well. So they are definitely a major player, I would say, here in terms of just like the broad market. If we go just narrow it down to the US, like Coinbase is king in the US. Kraken would be number 2 here. and Coinbase is doing 5 to 7x the Bitcoin volume Kraken is doing today. I would say, Kraken is a exchange I've used as well. Has a good reputation, high security, has lower fees. They do have these other product lines, prime brokerage services. They're offering staking. So they're doing a lot of the similar things that Coinbase is doing, but they just don't have the brand, I just think. And brand just really matters. So even though the fees are cheaper on Kraken, I'm using Coinbase just because I feel comfortable on Coinbase. And I think, there's a stickiness to where you onboarded is probably where you're going to mostly stay in crypto. Gemini is another larger exchange, I would say, in the US. They are not even anywhere close to the size of Coinbase, doing significantly less than 10% of Coinbase's volume looking at Bitcoin currently. So I would say not a huge threat here. When we look at DeFi, so you could put Uniswap into the mix, I guess, if you want to look at Uniswap is a US-based DeFi protocol. Uniswap is doing a ton of volume. So this is interesting. I mean, they're doing 4 times the amount of volume that Coinbase is doing if you look at all their assets and compare it to Bitcoin. So they're not doing 4x the volumes in total. Uniswap is kind of where a lot of meme coin trading and a long tail of assets is trading on something like Uniswap, whereas Bitcoin ETH is mostly, trading on something like Coinbase. So something to watch there with Uniswap. We talked about how they're growing themselves on Base, which is driving value to Coinbase as well. And then you have Robinhood, right? You mentioned Robinhood as one of the US-based brokerages that offers a longer tail of assets. Fidelity has Bitcoin and ETH only, but Robinhood offers 15 tokens today. So Coinbase has 260. So they're not even close to what Coinbase is doing. But Robinhood there's plenty of retail traders that use Robinhood. The difference is that you can't move your assets, I don't think, if you're using Robinhood into self-custody. I don't know if you have a line of sight on that, but I don't think you can really go into Web3 from Robinhood. And this is just really kind of like a way for them to capture more fees. I don't know if Robinhood's really leaning into Web3. Coinbase is, and it is really a threat there. They're just capturing some of the retail flow. Actually, there's one other, I guess, competitive threat in the US. So there's something called EDX markets. And this is an exchange that was started up by Fidelity, Schwab, Citadel. Got a lot of news when this originally came out. I think about a year ago, this was announced. Haven't seen anything in terms of, are people using this? Is it live? Is it in the market? Haven't really seen any news coming out of there. But yeah, I'd say that's kind of the breakdown in the US. Coinbase clearly kind of owns the market in the US right now. And based on all these other product lines they're building out, it's just hard to see a competitor really coming in here. But yeah, curious, how do you view this?
Yeah, they're in a good position, I think. I have a few thoughts on especially the Uniswap and DeFi sector there in terms of competitive landscape, because it's interesting when you go a few years back and look at all these decentralized derivatives exchanges, perp exchanges, where their whole vision has been that we need to bring most of the trading volume on chain. We need to build a superior experience on chain than to what centralized exchanges already offer. And now when we think of Coinbase with what they're doing Base, I think it's very probable that within the next year or two, you will be able to interact with Coinbase's exchanges in a non-custodial manner on chain in one way or another, at least some of their trading products. So which basically then really eats into the core reason of being for a lot of these fully on-chain, decentralized perp and derivatives exchanges that have been kind of founded and started to solve that problem. But it's just been a very different approach, starting from a centralized approach, onboarding users, and then bringing the on-chain aspect of it, the decentralized aspect of it, non-custodial one. So that's something that I just wanted to put out there in terms of an interesting different approach and how that could affect competitive dynamics between on-chain and off-chain, because it's no longer off-chain versus on-chain in terms of Coinbase, right? Because they are now also on-chain and moving stronger and stronger towards that front. So yeah, we'll see how that plays out. But I think Robinhood, you mentioned that one, they have in no way started prioritizing crypto to the same extent as a fintech like Coinbase, but they did announce some partnership with Arbitrum to offer on-chain swaps for their users. So dabbling into
Okay.
the space, and I do believe that one reason why they would start working with L2s and maybe even considering starting their own, which I don't see actually too far off, is because when you look at the revenues that these L2 sequencers are able to capture, any fintech that is offering swaps or some sort of financial activity users should be interested in exploring that opportunity. So the competitive landscape
100%.
could start developing as people start better understanding Coinbase's business.
100%. I think what we sort of keep coming back to here is what's driving this value for Coinbase. Obviously, they've got a great team, they've got great leadership, they're building out the product line, but it started with this trust and the relationship with the user. So if you own that relationship with the user, I think this is really important for where this is all going in crypto. You know, that's the key. That's the key thing. And how do you sort of execute off of that is obviously something that takes years to play out. But that's really where they say they own that user, they have the trust, and we're seeing them execute now. So it's going to be interesting to follow.
Yeah. Finally, on the competitive landscape, a bit of a speculative question then. What do you think happens when equities are tokenized? Where are they going to trade?
Great question. Great question. And we didn't actually mention this when we were talking about Base earlier. So Coinbase has an alternative trading system, broker dealer license that they haven't turned on yet. And this is for the purpose of trading tokenized securities. And I've heard Brian Armstrong mention this many times that he's very bullish on this. And when you look at what's they're building with Base, this is very interesting because they can build out the tooling for basically the on-ramp of tokenized assets, similar to what, BlackRock has a partnership with Securitize. And that's a broker dealer transfer agent. That's where they're tokenizing the assets. And then from there, they can potentially trade and move their way throughout the ecosystem. It looks like Base could be a place where some of that tooling is built out. And then not only do they own the transactions, they own the wallets. Now you're getting a cut of basically the fees and the things that essentially when you tokenize the asset, those services that are provided. Yeah, I think it looks like that. Who knows? Maybe that ends up being that replaces the crypto trading fees as those erode away. Who knows? But yeah, we missed that when we talked about Base earlier, but that's part of, I think, the strategy is real world assets trading on chain.
It definitely is. Now, we spoke about Coinbase's venture portfolio a little bit here, and it's possible that they've seeded multiple unicorns. So as a mechanism for value accrual to coin, the venture portfolio could play a big role there. Maybe not to go into too much detail here because I guess people can go explore Coinbase Ventures' portfolio in more detail. But do you want to mention like a few blue chip projects or successful projects that they have seeded?
A couple, yeah. And I wasn't able to get great detail on this, but it looks like they were early into Uniswap and Compound and Aave and some of these DeFi blue chips. Alchemy is like one of the top infrastructure companies in crypto. They were early on. It looks like they seeded OpenSea, which got to a 13 billion valuation. We'll see. OpenSea is kind of going through a little bit of struggle now. There's been some competition there with other marketplaces as well. They were into Etherscan, which is data. They've had some investment into Near, which is a layer 1 blockchain. I believe there's over 500 investments. So not only are they making these investments, the amount of learning that they get by seeding these investments, working with other teams, growing their network of developers, it's all accretive, I think, not only to Coinbase's bottom line, potentially in the valuation of Coinbase, but also just the institutional knowledge that they capture with all these different relationships and all these various teams that their venture portfolio works with. So I don't think we'll spend a ton of time on that, but just another area that has potentially like huge valuation, creative valuation for Coinbase.
Definitely. Now, before we move on to speak about detailed financials, one thing that we can't ignore because it is top of mind for a lot of investors, and I think one of the biggest concerns for people so considering allocating capital to Coinbase is the ongoing lawsuits. The SEC lawsuit against Coinbase and just the constant regulatory scrutiny and uncertainty. So you want to maybe try and shed some light on what the SEC lawsuit is really about and how it could affect Coinbase?
Sure. And yeah, I'm not a lawyer, so I probably shouldn't be like the person talking about this, but I have followed, Coinbase. Their general counsel is very public with how this is all going. And I've sort of been following this a little bit. So, I mean, this really comes back to the Howey test. And, the SEC has been, giving Wells notices to a lot of the major companies in crypto. Coinbase was one of the first, I believe. And, the Howey test is basically looking at, is there an investment of money, expectation of profits in a common enterprise with a reliance on others? And, their stance has been that basically all of these crypto assets are securities. So if they're all securities, then Coinbase is essentially an unregistered securities trading platform. And, the business, if this lawsuit goes through and the SEC wins, what does that mean for all of these assets? They would all have to be delisted, and this would basically kill the industry. I mean, it's kind of like it's an incredible thing to think about that the SEC is actually just trying to kill the industry in the U.S. I don't think it's going to happen because of the Ripple case. I think that's like setting a nice precedent here, and maybe we should just talk about the Ripple case and what that potentially means for Coinbase. Basically, the judge ruled in the Ripple case that the XRP token, when it was trading on exchanges, there was no investment contract there. That the judge ruled that when the XRP token was sold to institutional investors, initially there was an investment contract there, and that it met all the prongs of the Howey test, and that was a security at that point. But when the asset was trading on the exchanges, there was no investment contract anymore. So what they did was they basically separated the investment contract with the asset itself. And that was like the key sort of takeaway from the Ripple case. You can apply that to every crypto asset. And it's almost like, how could any other crypto asset be a security if that's what the ruling was on Ripple and XRP? It doesn't mean that this is binding for every other crypto asset, but the SEC is going to have to prove it for every single asset that's trading on Coinbase, which is kind of ridiculous that they could even go through that process. So I'm bullish that like the SEC is going to lose this case. And this is really just an effort to slow down the innovation that's occurring in Web3. I'm curious what your thoughts are. I don't want to go too far into this because I'm not a lawyer, but that's my view on this.
Yeah. And the only thing I'll add to that is that within the SEC, I've listened to a lot of interviews that Hester Pierce has given, and she tends to be of the opinion that is very different to what we publicly see the SEC putting out, which is that we should not be pushing these crypto companies offshore. We should really be giving regulatory clarity. So there are people in the SEC also pushing the right initiatives forward, I feel, but unfortunately, the actions have not really aligned with the, I'd say, broader benefit of the whole financial ecosystem.
Yeah, I mean, I totally agree with that. So I've been pretty vocal about what's going on here, just on LinkedIn and social media. And, my view on this, there's people that read that from the SEC. I've actually talked to people that read the DeFi report that work at the SEC. There's a lot of good people at the SEC that want to do the right thing. The SEC is an agency that we need. We want regulation. This industry wants regulation. I think responsible players clearly see the need for regulation. This is not about avoiding regulation, and Coinbase has sought regulation as well. They met with the SEC several times, as did Robinhood, which also just got a Wells notice. The issue is just this regulation by enforcement. There's been absolutely zero effort to actually work with the industry to sort of come up with rules that could fit, this innovation. And like the stance is basically that, oh, it's innovation, so we're going to try to circle the square. And if you can't circle the square, we're just going to sue you. And that's where we are. That's where we're at. I don't think this is an issue with the agency itself. I view this as an issue with the leadership at the agency. And it just doesn't make any sense. So it looks like it's just politics. And, we talked about this a little bit last week, so I don't want to go too far into it, but it just looks like politics. I'm pretty bullish on where this is going, especially if we see a change in the administration at the White House. We have the election coming up in 6 months or so. So if Trump wins the election, it's very possible that he just gets rid of Barry Gensler. And, what does that mean? Do all these lawsuits just go away? I don't know. I think the incoming SEC chair would pick all this stuff up, and then they would decide if they're going to pursue this and if it's in the interest of, taxpayers to continue to go down this road. That's probably how this potentially ends, is actually the White House, a changing of the guard at the White House, potentially.
Earlier on, we spoke about the separate line items on Coinbase's P&L, what's contributing to the revenue. But with the return to profitability this quarter after a long period of time, it would be great to speak about what the key profit drivers really there were. So pulling together all these line items that we discussed and walking through some of the KPIs.
Yeah, we'll keep it high level. So Coinbase did over almost 1.2 billion in net income in Q1. If we compare that to like the peak of the bull cycle last cycle, they did 1.6 billion. So they're about 27% off of their like sort of high watermark in terms of quarterly revenue. And that it's mostly, essentially where's this uptick coming from? It's a combination of all the product lines that we mentioned earlier. We did mention that the trading volume is still about 48% off of the high watermark from last cycle. But their ability to get to the 1.2 billion of net income, it's kind of interesting because when you dig into that, you can see that their operating expenses have gone down a little bit. So they were doing, even 3 years ago, when you think about, how many product lines did Coinbase have 3 years ago? When we talked about there weren't that many versus what they have today, you would think that they like doubled their workforce to get there, but I'm not seeing that in the data here. So their operating expenses actually dropped. It was over 1.3 billion in Q2 of 21. This is, the peak of the last cycle. And I think they got very bloated. So I think like during that cycle, they hired way too many people, lost track of like their core mission a little bit, I think, brought in a lot of people, I think, from traditional finance that maybe weren't great fits. And during the bear market, they laid off, I think, 20%. And they just seemed to like really figure it out during this period. This was really kind of the tail end of 2022, 23 into 23. And their operating expenses went from almost 1.4 billion Q2 of 21 down to about 900 million in this quarter. So that's pretty wild to think about, just the efficiency of the operation with all these product lines that they're building out and everything they're doing with Base and Stablecoins, and just, it's a big company to run at this point. So that was kind of like the big takeaway, I guess, on the expense side, just that they're pretty lean. And, what is driving like those expenses? It's primarily just like their technology and development and their like general and administrative expenses, which is primarily personnel. It's primarily, their staff is where most of the expense on their books is coming from. I'm trying to think if there's anything else that I want to add here in terms of balance sheet. So they currently have 6.7 billion of cash on the balance sheet. That compares to about 4.3 billion at the peak of last cycle. So they've added significant, cash to the treasure chest as well. So they're in a pretty good cash position. In terms of like long-term debt, they've got 4.2 billion of long-term debt. That is up a little bit from last cycle. They had 3.3 at the peak of last cycle. But yeah, I just see a very healthy company. Their PE ratio, we just went through all of these like the product lines, the potential to just like really own a lot of these markets and integrate throughout the tech stack. This is a high growth tech company with a PE of 39 right now, which is, some people might say that looks overvalued. I mean, I'm looking at that saying, wait a minute, like that looks pretty good. And the stock is up. It was trading around $35 last cycle. It's up to 200. Or sorry, in the bear market, it was trading around $35. This was like after SEC sued them and everything. And it's now trading around $200. So it's made a huge move here. And the PE ratio is still at 39. So I don't know, man, like not financial advice. None of these episodes are financial advice, but man, we are bullish on Coinbase.
Yeah, definitely. And just to add to that, it seems to be a very operationally efficient company right now. And the way that they've reacted to all of these, what you could say, kind of potential issues, which you had dependency on trading fee revenue. or having a slightly bloated team, which tends to happen to a lot of high scaling companies. I just wanted to bring forth one thing when looking at the team right now is that they really do implement safeguards pretty quickly, or they start taking action on any identified issues quickly. And they are doing their best to hire only top tier talent and make sure the company does not get bloated. They recently put out this blog post a while back called Talent Density at Coinbase, which was after a bit of layoffs, where they made it very clear that they now require CEO and president COO, so Brian Armstrong and Emily Choi's approval for every single hire in the company. Yeah,
and
that's
4,500 employees, by the way. Like,
yeah,
that's crazy.
yeah, and they got quite a bit of backlash for that. And then their chief people officer said that they in no way see that this is low value use of management time. This is the very high impact use of management time. And I think that is a very interesting approach that just speaks to the fact that they want to build a world-class company and attract world-class people to help them get to building this new financial system. So just another bull catalyst there.
Yeah, there's some intangibles here too, and it makes sense to speak about these real quick. I've interacted with many people at Coinbase. I'm sure you have as well, and they're quality people. Like, I've never interacted with people at Coinbase and been like, man, that guy's an asshole, or it's always like very quality people. So that's just like a kind of an intangible that matters, I think, when you're interacting with these companies. And they're just, as a user of Coinbase, like, the customer service has gotten a lot better over the years, which has been nice to see. And that's like almost definitely really hard to find in crypto. So, they've just done a good job, I think, establishing that trust early on. And yeah, man, I think they've been around for 12 years. So they have so many learnings that they're now applying into this next sort of phase of growth. And I just think they're going to be tough to compete with. They got to get through these regulatory issues and a few other things. It's obviously never easy, but man, I can't think of another company in another industry or sector that's as well positioned as Coinbase is in Web3. And when you think about the potential growth of this industry, what this could turn into, I think it's possible this growth story that we've sort of laid out here and where this business is at currently, possible that this growth trajectory starts to look like Amazon potentially. We didn't really go into the details of this, but there's a story here with kind of the way that Amazon built itself out, and it looks kind of similar what Coinbase is doing.
It definitely does. Amazon started selling books. Coinbase started selling Bitcoin. And then as, in Amazon's case, the internet matured, they started introducing new product lines and ended up building an infinite marketplace for goods. And then introduced AWS as a massive revenue driver and everything else. And I think Coinbase, in terms of Web3 and an on-chain economy, has taken similar steps in that direction. And I feel during this past hour and a half, we've done a pretty good job at debunking the misunderstanding that Coinbase is just an exchange, which it is not. But it still kind of does raise the questions that, what is it then? Because there's so many things going on. Is it a bank? Is it an infrastructure company? Is it something even more than that, or a combination of all of the above? It would be interesting to kind of maybe get a little bit more of the thinking behind how Coinbase could be following Amazon's growth trajectory here, if you have some further thoughts on that.
I just think that, like you said, Amazon launched, I think it was like 1994, and they were just like a little bookstore. And, Coinbase, similar, just a little Bitcoin exchange with a wallet. And like Amazon added, I think they first started adding music and DVDs and home improvement products and all these things. And that was like 5 years into it. Similar to Coinbase, didn't add Ethereum until 4 years into their business. So pretty wild to think that they went 4 years with just like this Bitcoin only product. Sort of looks like Amazon there. Amazon never stopped innovating. Like by 2000, this is 6 years later, they had opened up their own marketplace, enabling like third-party orders and stuff like this. They built Kindle, they built Prime, they built streaming, they've got like original content. They just kind of kept innovating. And because of that, I believe what happened was they started to realize that they had so much institutional knowledge and that they could start to create this platform, which is really what turned into AWS. So after launching 12 years after launching the bookstore, which is about where Coinbase is today, 12 years from launching the Bitcoin only exchange. AWS was born within Amazon. AWS does $90 billion in revenue today for Amazon. So I don't know, man. It just looks like the little retail product, and then all of a sudden it starts to spread out and it becomes infrastructure and it becomes essentially built into the internet. That's kind of what Amazon did. It rode the wave of the internet. And it's still riding that wave. And it feels to me like Coinbase is just positioned themselves to do the same thing, but in Web3. So
Yeah,
that's it.
completely agree with you on that one. I think Jesse Pollack, so the leader of Base, said in a lot of interviews that he thinks of Base to Coinbase as what AWS was to Amazon. And I think that just really speaks to the fact of also the stage at where Coinbase is as a company in terms of growth trajectory. Now they're really turning on the engines to capitalize on their position in this on-chain economy. And personally, at least maybe if we could just wrap this up with some like personal thoughts on where we see Coinbase may be going the cycle, but I think of it like Coinbase will be at some point the world's largest bank. Of course, I'm very bullish on on-chain economy and digital assets, but that's what I see. But then in addition to that, thanks to Base, they're building a massive on-chain economy, and their thesis is to build the largest on-chain economy. And on-chain economies, in my mind, will be much bigger than any businesses we've seen beforehand. So in a very long run, the upside potential is pretty incredible here if you do believe in an on-chain crypto native economy at some point in the future.
Yep. Couldn't agree more. I don't want to get too bullish, but yeah, I mean, I agree with you. And this is a long-term thing, right? This might be another 10-year story, but I believe that what we could be witnessing here is like the beginning of a $1 trillion company is sort of where I see this potentially going. Coinbase's market cap is about 50 billion right now. So to give you an idea, like where this is potentially going, I just think, we've sort of laid it all out here. They're just well positioned to sort of ride the wave of Web3. And if you believe that Web3 is going to be actually the next iteration of the internet, I can't really, there's only a couple assets I think that you could sort of look at and say, okay, this is going to ride the wave. This is like a core asset for Web3. And I would say like Ethereum and ETH might be one of those assets. Bitcoin would be one of those assets. I tend to think there's going to be a few other like layer one blockchains. So maybe like you put Solana in there, but like Coinbase is in there. Coinbase is in there. It's not a blockchain. It's an application that's now integrating itself into the infrastructure, it looks like, of Web3. But this is like a core holding in my personal portfolio. I plan on holding it for forever. So
same. Yeah. I think of it kind of like an index bet on just the adoption of the digital asset economy.
Great way to think of it. Great way to think of it. Yeah. Because I've had people come to me and say, what should I buy, Mike? You're doing all this analysis of all these things. If you don't have a crypto wallet and you don't really want to deal with that stuff, you can buy the Bitcoin ETF now. But like Coinbase is a nice way to diversify yourself. If you want some Bitcoin with Coinbase, you're getting like access to Ethereum and access to stablecoins and access to wallets and access to venture portfolio. You're getting access to all the other things outside of Bitcoin. So those two assets can work pretty well together for a pretty simple, crypto exposure, I think.
Completely agree.
Not financial advice, as always.
No, and as mentioned, we both hold positions in coin, so it was good to keep that in mind as well. But I think this was I think the best we can do in under 2 hours. That's a topic we definitely talk about for a lot longer as well. But as things evolve as quickly as they do, we'll definitely be coming back to Coinbase and doing other overviews as they launch new product lines, as the existing ones develop, and as this cycle progresses. But thank you so much, Michael, for this session. And we'll be doing this again next week with a bit of a different...
Yeah, a little preview for next week. This is awesome. Yeah, great episode this week. I hope people enjoy this. And, we always welcome people to hop in the comments. Let us know what you want us to cover, how we can get better. Always welcome that. So next week, we got our first guest of the Signal. It's going to be a FUD busting episode. So we're bringing on a special guest. I'll hold back on the name just now, but this is a ESG investor focused on Bitcoin, which the market perception is that Bitcoin is like the worst thing for the environment. This guy's investing in ESG friendly things around Bitcoin and Bitcoin mining. And we're going to walk through sort of like the bull case for like the combination of how Bitcoin and energy markets are going to come together. So I think it's going to be a really interesting episode, a little different from these first 5 episodes that we've recorded here. But yeah, really looking forward to next week.
Likewise. Thank you everyone for tuning into this one. Make sure to like, subscribe, follow the podcast, and share it. Help us out. And we'll see you next time.
Yep. We'll see you next time. Thanks, everyone.